Last week's Federal Reserve cut should put more money into consumers' pockets, but will that translate into higher spending? Welcome to Market Insight. I'm Elena Casas. Mortgage rates are coming down and the cost of credit slowly falling for American consumers, but they are nervous after years of high inflation and a slowdown in the job market. How worried, then, should corporate America and its investors be about the economy hitting a bump? To find out, I'm joined now by Janasiewicz, lead portfolio strategist at Natixis. Jack, hi! You said in a note that we shouldn't confuse a soft patch with the onset of a recession. So what makes you confident that this isn't the latter?
I think we just do a simple equation, right? We simply take the number of people who have a job, multiply that by how many hours each week they're working and how much they're earning per hour per week. And that's been growing at a clip of almost 5% on a year-on-year basis. This does a pretty good job of, I think, mimicking nominal GDP. And if you look at the previous 10 years right before COVID, we're coming in at a growth rate of around 4.5%. So we're still basically above the pre-COVID trend. That's money in the pockets of the aggregate consumer, and they're going to do what they do, and that's spend.
Do you think consumer spending could even see a jump on the back of this rate cut as people see more money into their pockets?
I think right now our initial guess would be that maybe there's a little bit of hesitancy. I think there's a little bit of concern with regard to what we're seeing on the political side, but certainly seeing an easing of rates, I think at the margin is going to help boost confidence. And right now we're basically spending what we're earning, and that's sustainable going forward. And we would expect longer term that trend probably starts to pick back up again.
You did mention political volatility there. The autumn months before an election in the US very often see a market sell-off. Are you expecting that in the next couple of months?
And I think that seasonal pattern that you reference is probably still in play. If you look at sort of the market catalyst potentially coming up, you've got PCE coming at the end of the week, but I think you're really going to have to wait until earnings season kicks in. So between now and then, which might be about a 2 or 3 week period, you've got this sort of nothing going on, and the market probably drifts around. And I think maybe that's where the political risk starts to take a little bit of toll, and maybe you get a little bit of a pullback in the markets. But we'd be buyers on the dip in here going into the end of the year.
You said in your notes that Powell threaded the needle perfectly when picking a 50 basis point rate cut. Is the Fed treading the right line, and why?
We think so. And I think the big takeaway for us, the Fed is in the risk management business. They have a dual mandate, which is going to be, looking at inflation, keeping prices under control, as well as full employment. And if you think about it from that risk management perspective, what's more likely to occur? Inflation reaccelerating or the unemployment rate pushing higher? We think it's more of the latter. And so when you start to think about the balance of risk shifting and the onus really now falling on the unemployment side or the labor market side of the mandate, I think there's plenty of cover there for the Fed to start easing because, quite frankly, the rates are still fairly tight, even after we look at this most recent 50 basis point cut.
How should investors then position their own balance of risk, defensively or moving towards risk on now?
Our big takeaway from the 50 basis point cut and the comments that came following that cut, I think the Powell put is in play here. And whenever you have the Fed on your side, so to speak, if you're an optimist or you're bullish the market, that's a very strong force. So from our perspective, I think you're supposed to be leaning into owning equities, staying risk on, and really looking to add on any pullback into the end of the year. So we're still quite optimistic in terms of risk on here.
Thank you so much, Janasiewicz of Natixis. And that's your Market Insight. Don't forget, you can watch more videos on Reuters.com.